Hello everyone, we will be covering Chapter 16 in this video. And Chapter 16 is about process operations and process costing. Process operations are used for production of small identical low-cost items. Mass production items mass-produced in an automated continuous production process, and costs can be easily directly traced to each of the units of the product. So process operations is more about the production of small, identical, low-cost items, the mass production in automation with a continuous process, and generally with these type of operations, costs can be directly traced to specific units. When we look at process operations and job order operation costing systems, we know that job order systems are for custom orders, process is for repetitive. Job orders are low production volume, whereas process is high. Job order systems are high product flexibility, whereas process systems are low. And job orders allows medium to low standardization, whereas process systems are highly standardized. So we have products for a job order system that are more customized and individualized in nature versus identical items in a process system. And the basic concept is, it's I guess for today's world would be something that you would find on Etsy, custom order made, versus something you would buy like a mass-produced pillow from Walmart. So it all depends. Is somebody actually touching this? Is it personalized? Does it have your name on it? Has it been monogrammed? Is it a custom painted car versus one you can buy off the lot? Those are the kind of things that we compare when we're looking at job order versus process operations. So if we look at the way items flow, for job order systems, which we talked about, you have direct materials, direct labor, and overhead. In a process system, you also have direct materials, direct labor, and overhead. However, in the job order system, which we talked about in Chapter 14, we know that things are tied specifically to the job. They move to finished goods, and then we look at the cost per unit for one job. Within the process system, we look at the direct materials, and it moves to the second process, which is the cost equivalent of unit for process 2. We look at the direct materials, direct labor, and overhead for process 1 and calculate the cost per equivalent unit for that unit process. Once both processes 1 and 2 are calculated, then we actually move those to finished goods. And on the bottom rung of that, we get our total cost per equivalent unit. So we have to identify cost for both process 1 and process 2 individually and see what their cost is so we can get the equivalent unit of production. Whereas in the job order system, we simply say the cost for one unit, or the cost per unit for one job is this. Here we look at each individual processes. Equivalent units of production, or EUP, is calculated for the works in process account. So we have to consider the equivalent units of EPU for materials and conversion cost. So if my EPU for direct materials is $10,000 at 100%, that means that the whole total cost is $10,000. However, if my EPU for direct labor is $10,000 and it's only 20% complete, that means I assign 20% to direct labor cost. The EPU for factory overhead is $10,000 and only 20% complete. Only $2,000 is assigned specifically for that EUP, The weighted average versus the first in, first out method. When we look at the actual weighted average versus the first in, first out, the weighted average is the sum of all of the items that have been produced and gone through the processes. First in, first out is based on the cost associated with the first materials in and the first produced item out. Process costing illustrates how how the items move or flow through. So we have a company called Gen X, and it uses the weighted average cost flow system with the following 4 steps. We determine the physical flows of the units. We compute the equivalent units of production and compute the cost per equivalent unit. We assign them and then reconcile the cost. So if we look at Gen X Company's process of operations, and I highly encourage you to look at slide 14 because it shows you a really good graph of how these things actually work, how they come in, how they go out. This is an updated slide for our textbook. So this is a much improved information, and I highly encourage you to look at it. So in the process of operations, we have to consider the works in process of inventory, the units started in the current period, the units transferred out, and the ending work in process for the end of the time frame. So if beginning March 31st, we had work in process of 30,000, that's our beginning inventory. Then we started 90,000 units this period, and we sold or transferred out 100,000. Whatever you have left is your ending works in process of inventory. So our ending works in process and inventory is $20,000. That $20,000 would actually be my beginning balance for the month of, the ending works in process was for April 30th, so that would be my beginning works in process for May 1st. When we look at Gen X information, we also would consider their direct materials cost, their conversion cost, and their cost during the period for March, and their cost during the period of April. So if our beginning works in process was 30,000 units, 100% of direct materials were complete, but 65% were conversion cost, then what would our total conversion cost be? That's what we have to figure out. And you can look at slide 15, and it gives you a better idea of how to solve these particular problems. We also have to deal with our costs that are incurred during April, and we have direct materials and direct labor, and then we have factory overhead. And in this particular case, they tell us we have factory overhead at an applied rate of 120% of the direct labor hour. What should we consider? Well, if we have to compute the cost per equivalent unit, then we have to know a couple of things. Again, I encourage you to go out and look at that slide as well as slide 19, because it shows you the cost of beginnings, works in process here is the 81,000. It also shows you the conversion cost, which is $108,900. Then it shows you your cost incurred per period and your total cost. The second step in equivalent units of production is to determine the total equivalent units, in this case 120,000. And then you have to determine what your cost per equivalent unit was. Well, if I had 120,000 units and my total costs were $360,000, then that means my total cost per unit should be $3. Under the conversion cost, my total costs are $485,100. My equivalent units of production are 105, and that means my equivalent units produced would be $4.62. So how did I arrive at that? Well, the first thing I did was calculate my total cost. Then I calculated my total units. You divide the units by the total cost, and it gives you the cost per unit. The same is true for the conversion cost. Assign and reconcile cost. Once we have assigned the cost, then we have to look at how these items came out. So if our direct material is $3 per equivalent unit, which we just calculated, and I have 100,000 units of production, equivalent units produced, that's 300,000. In the conversion, I had 100,000, that's 462,000. So the cost of units completed this period would be your total direct materials cost plus your total conversion cost based on the equivalent unit production, which is 762,000. Then I have to consider my works in process of inventory. We talked about the fact that you would have 20,000 units left. Your equivalent unit production is $3, which gives you 60,000. You have 5,000 units left under the conversion at $4.62 a unit, which is 23,100. So the cost of ending works in process of inventory is 83,100. When we assign or reconcile cost, we're trying to trace all costs back to those items. So we can identify that $762,000 are for the completed units. Then if we're assigning costs to the remaining units uncompleted, that's $83,100 for a total cost of $845,100. When we look at process costing, we generally have a summary. And the summary generally includes your cost of beginning works in process, direct materials conversion, the cost incurred for that period, which are made up of the direct materials and conversion costs to give you your total cost. In addition to that, we include the unit information and the cost per equivalent unit of production, along with the total cost assignment and reconciliation. So when we look at a process summary for the cost, we have to know that it is made up of the cost charged to production, the unit information, the equivalent units of production, the cost per EUP, and the cost of the assignment and reconciliation. So we have the cost data for Gen X on slide 23, and it shows you the raw materials, the beginning works and process of inventory for roasting and blending, and then the materials purchased, the requisitions for the materials for roasting and blending separately, along with your indirect materials. For Gen X, we can see that we are able to divide our works in process, direct material, direct labor, according to the actual process itself, which is roasting or blending. So the cost data sheets show the individual cost, and then they actually show the indirect materials and indirect labor. Once we have calculated those, we move on down to the actual overhead cost for April, which would be your insurance expense on the factory, utilities payable, depreciation in factory equipment expense, and then your other, which would be paid in cash. If we're accounting for materials cost, we have to take into account the actual work in process and what it's attached to. So when we look at how much in raw materials did we actually spend? $400,000. So we paid that on credit, which means we have to look at our accounts payable and raw materials inventory. Well, once we begin the work in process for roasting and blending, we have to reassign the cost from the raw materials to the works in process. But we've only assigned the portion that we're using here, which is $279,000 for roasting and $102,000 for blending. Then we have to deal with our factory overhead and raw materials because we have to move it from the raw materials inventory from the factory overhead, to the raw materials inventory to adjust the cost associated with it. Accounting for labor costs. Under this method, we know we have works in process of inventory for both blending and roasting, as well as factory payroll payable. We also have factory overhead to record the indirect labor, and then for factory wages payable for April, which should be the total of our wages. Then we have to make an entry for our factory payroll payable and cash. Money walks out the door. Accounting for factory overhead. Anytime overhead is involved, we have to look at what items are factory overhead, and we have to adjust those payables. So we have prepaid insurance, utilities, and cash. And though accumulated depreciation for the factory equipment. I have accumulated depreciation, cash, utilities, and prepaid insurance, which all total up to $262,400. The expenditures individually are charged as well as factory overhead. Then you have works in process of inventory for your applied overhead. So in this case, we estimated that our applied overhead moving forward is going to be 120% of direct labor. So if we know that we have to take into account for the 120% of direct labor, then we have to calculate our work in process of inventory for our roasting and blending. And that becomes $205,200 for roasting and $219,792 for blending. And our total would be $424,992. When we have to account for transfers across departments, we have to consider our works in process of inventory, our finished goods inventory, and cost of goods sold. When we talk about trends in process operation, we talk about process design, customer orientation, services, continuous processing, automation, and the just-in-time method. Hopefully I've covered some useful information for you guys for Chapter 15. Feel free to ask any questions you have after reviewing this video. Thank you.